This has been one of the worst altcoin crashes we have seen in a while. Let's have a look whether or not it makes sense to buy all of those dips. Let's compare the altcoin performance with Bitcoin's performance. Let's see where this might be potentially all headed. And let's of course also zoom out. Let's see how much the altcoins have gone so far. Let's see how much more capital we might need in order to push higher. What we've got behind me is a comparison of the altcoin market cap and Bitcoin. Bitcoin is in green and the altcoins are in turquoise. And we can see that especially in 2017, the altcoins outperformed massively, right? So in a bull market, the altcoins tend to do better. And we had a repetition of that behavior again at the end of 2021. So we first went to 20K, then we went to 60, 69K. But what happened with this recent rally? The rally in 2023, 2024. How did the altcoins actually do since we bottomed out at roughly 16K? Let's have a look. Let's move this chart to exactly that bottom. And here's an interesting first finding. Bitcoin went up by more than 300%. The altcoins in aggregate, so that's total 3, went up by less than 100%. So in this recent rally, in the rally from 16K to 72K for Bitcoin, the altcoins in aggregate really didn't do that well. And so the reason why I'm talking about a crypto crash is because of this chart. This is the others dominance. The others dominance measures how much of all of crypto is in the altcoins that's not the top 10. So you look at all of the altcoins below the top 10 and see how much of that comprises the general crypto market cap. And so we peaked out at around 20% of all of crypto being in the smallish altcoins. This now went down to less than 10%. And especially recently in the last few days, the relevance of the not so large altcoins really crashed. Here's a slight variation of this chart. This looks at the dominance of all of the cryptocurrencies except Bitcoin, except Ethereum, and except the major stablecoins. And of course, we see quite a bit of a crash here as well. And there are a few vertical lines. Now, what do those vertical lines show? Those lines are corresponding to those lines here. This is the stablecoin market cap, which tended to rise in 2021 and 2022, then went sideways, and then really crashed after the Terra Luna collapse. So have a look at this. From May 2022 to October 2023, the stablecoin market cap continuously declined. And that's also when the altcoin market cap tended to go down. Then we had a turnaround in the altcoin market cap. And that's also when the stablecoin market cap tended to grow. Now we don't see that much growth anymore since April of this year. And so we are also seeing rather ugly price action since then. The stablecoin market cap is a measure of how much retail money is flowing into crypto, right? If you send your fiat currency to a centralized exchange, that centralized exchange might send this over to, for example, Tether. Tether takes that money and then prints the tokens, issues the tokens on the blockchain. This is then what we can see in the stablecoin market cap chart. When the stablecoin market cap chart isn't growing, that means retail isn't really depositing any money. And so this going sideways or going down is bad for the altcoin market cap. The Bitcoin dominance tends to grow. So even though Bitcoin isn't doing that great recently, the altcoins and Ethereum did worse. Thus, the Bitcoin dominance, so the fraction of all of crypto being in Bitcoin, tends to go up. We're now at 56%. It's not historical highs, but we're definitely climbing pretty much by the week. And where does this increase come from? Of course, partially from the Bitcoin ETF. And so have a look at this. This is how much Bitcoin supply is getting scooped up by the ETFs. Since launch in January of this year to today, 1.3% of all of Bitcoin is now locked up in those ETFs. If we add the Grayscale Bitcoin Trust to that as well, we are at 4.5% roughly. And so here's the problem, right? In order to get higher prices, we need to see capital flowing in. Unfortunately, there is now monetary tightening. The interest rates aren't yet going down. And so US M2 is also not growing that much. At some point, it probably will, but in the last months, unfortunately not. Bitcoin is suffering from this. The S&P 500 is not necessarily suffering from this. This is a very long-term chart that starts in 1959. This is the S&P 500 divided by the US money supply. So over the long term, we aren't really gaining by investing in the S&P 500, at least relative to monetary expansion. So where are we now with Bitcoin in the grand scheme of things? What's the potential risk to reward? There's all kinds of models. Here's a very simple one. This is simply just a few curved lines drawn on a chart. There's nothing scientific about it, but it simply just connects the bottoms and the tops. And if you look at that quote unquote model, we'd see a potential downside all the way to 30K. If we were to crash tomorrow, probably we rather bleed slowly if you're getting bearish. So it's 30, 33K, somewhere in that area. The potential upside is maybe to 115K or so. So we're not super cheap, we're not super expensive. Bitcoin was able to outperform the altcoins. The altcoins are crashing, and that's because not a lot of new money is flowing into the system. The stablecoin market cap is just flat. So what should we do in situations like this? I believe always in diversification when there's not really a clear signal in either direction. If you're not dirt cheap or hyper expensive, simply just have everything, right? And in case it crashes, we can buy the crash with those other assets. In case it goes up, then we can sell at those elevated prices and then allocate to the other assets as well, right? It's important to have a very diversified portfolio of assets that are not highly correlated. So you don't want to have a lot of different altcoins. You want to have crypto and gold and crypto and stocks, etc. You want to have very different things because again, the altcoins tend to move in the same direction on the same day. Stocks and property and gold and crypto does not necessarily move in the same direction on the same day. You want to be diversified across asset classes, not across assets within the same asset class. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. If you've got Telegram, then feel free to join us. The link is down below.